Something interesting just happened in the Toronto housing market last month in February. Sales increased from January, prices increased from January, and at first glance, it might look like the market is starting to pick up again.
We are back!
But we also just experienced a record low level of activity in January. So the February numbers were only ever going to get better. But when you dig deeper into the numbers, the story becomes a lot more complicated. So the big question right now is this: is the Toronto housing market starting to recover, or was last month just a temporary bounce? So let's walk through the numbers, because the data coming out of the GTA right now is sending some very mixed signals. And more importantly, I want to explain what this actually means if you're thinking about buying or selling in the GTA this year. So let's start with the number that tells us how active the market really is: sales. So in January, the GTA recorded about 3,073 home sales. Then in February, that number increased to 3,868 sales. So activity clearly picked up a little bit month to month as we move towards the spring market. Historically speaking, this always occurs, as you can see in this chart for the last year's January and February as well. Now for buyers, what this means is competition may slowly start increasing as we move further into the spring season. More buyers tend to enter the market around this time of year. Based off of previous trends of activity, we can probably assume another uptick in sales activity for the month of March, and the safe bet would be that prices will remain flat. And if there is a time in this year, and that's a huge if, the average sold price will rise, it will be after March, in the 3 months, typically April, May, June, the spring market. Now, if the GTA market were to actually experience a bearish spring market, you can safely say that further downward price action would occur. Now, my guess in December for the GTA market was that prices would fall across GTA by maybe 5 to 6% as a whole, from $1.6 million to 950,000 range. But I don't think it's going to happen all at once. We will have a mini uptick in the spring, a cool down in the summer, and then a gradual decrease.
Call it a wild guess.
I don't have a crystal ball, obviously. I just look at the economy, what's going on in the world, the amount of debt that the typical Torontonian is in, and then I look at immigration numbers as well as unemployment. So for sellers, however, this is actually encouraging news in the short term. It tells us that buyers are still active. They haven't disappeared from the market. The key right now is simply making sure your home is priced correctly, because buyers are still out there. They're just very selective. By the way, if you're new here, I'm Karl, and my team and I help buyers and sellers move across the GTA. There is no budget too small. Everyone gets the same level of great service and complimentary services as well. If you want to chat about your situation, I am always so happy to connect with those of you who watch this channel. Just click the link in the description and we can schedule a call.
Let's do it.
In January, the average home price in the GTA was roughly $972,000. Then in February, that number climbed to just over $1,008,000. So if you only looked at these numbers, it might appear that prices are starting to rise again. What this suggests to me is that the February increase may simply be the normal approaching spring market effect, rather than a true shift in the overall market trend. Now let's look at supply, because something unexpected is happening with listings. Many people expected a wave of inventory to hit the market in 2026, including myself, from sellers who couldn't sell last year coming back to the market. But the numbers show the opposite right now. In February of last year, we saw about 13,000 new listings hit the market. This year, that number dropped to around 10,700 listings. And that's about a 17% decline in new listings. And this is why I think the average price went up. So what this tells us is that many homeowners are choosing to wait right now instead of listing in a softer market. So for buyers, this means inventory might not be as high as we initially expected, but there's still lots to choose from. So while the market has cooled, buyers may not see a huge flood of options appear overnight. And for sellers, this actually provides some protection, because if fewer homes are coming to the market, that helps prevent prices from falling too quickly. Now this chart might actually be the most revealing one. Homes are taking significantly longer to sell. Last year, the average property sold in about 42 days in February. Today, it's closer to 54 days. That's nearly a 30% increase in selling time. And that tells us something important about buyer behavior. Buyers are no longer rushing. They are taking their time, they are comparing properties, they're negotiating more. For buyers, this is actually a really healthy environment out there. You have more time to make decisions and you're less likely to feel pressure to overpay. So our first-time buyer clients especially, yes, there is still some competition on turnkey homes in sought-after areas, but for the most part, we are still getting solid deals. We actually just got an offer conditionally accepted for a detached home in Scarborough, and we think the price is going to land after inspections around $725. So $725 for a non-fixer-upper detached in Scarborough.
Very good. Very good.
A lot of deals to be had out there. Now, looking at this data, it really feels like the GTA housing market is in a bit of a standoff right now. So buyers are waiting to see if prices fall further. Sellers are waiting for buyers to accept today's prices. So I'm curious, which side do you think moves first? Do you think the sellers are going to cave or the buyers are going to cave? Now, another factor creating some confusion in the market right now is the bait pricing listing strategy. This has been going on for a very long time. It works very well in a closed bidding environment like the GTA is. And essentially, it's where many homes are intentionally listed way below their market value or of what they would accept. And the goal is to generate lots of offers on a certain night and create a bidding war where people get reckless, where they raise their bids, but in the process, they also get rid of their conditions that protect them. So buyers end up giving up their financing condition or their home inspection clause, right? And the reason that this strategy is used so often is it does work. It's highly effective. You won't get someone's best offer or highest price if they are the only person interested in the property. So it's annoying for buyers, yet it can be effective for sellers. But what ends up happening is if the home sells above asking, right, that artificially low price, the headlines become, hey, these properties are sold over asking, or the Toronto average is 98% of asking. And so it really screws up the stats. Sometimes, and this happens so often, those homes don't even sell on the offer night. So they get relisted days later at a higher price. And for buyers, the key when you're in multiple offer situations is you never want to get distracted by the asking price. What really matters is the comparable sales and the research that you do to determine the market value of the home. So you have to stick what the data says is a fair price. For sellers, pricing too low backfires a ton of times in the market. That offer night doesn't go as you expected. So what ends up happening is you will waste a week of being on the market. You interrupt your life massively as the home does get lots of showings, but it gets showings by tons of people who can't afford the home, the selling price that you want, because they're seeing the list price. So if you list it at $699 and you won't accept 900 something, well, a lot of people are going to offer, $750, $800, like a mental roadblock to go from $699 to $900. Just doesn't make sense to do. Now, let's talk about condos for a moment, because this is where we're seeing some of the biggest pressure in the market. And so many condo owners obviously purchased their units during the peak years of the market. And today, some of those units may be worth less than what they originally paid. And because of that, a lot of condo buyers are actually kind of on a holding pattern. And they can't sell because they might be underwater. They don't want to sell because they don't want to leave their property at a loss. So for buyers, when you're navigating the condo, there's lots of opportunities. For sellers, especially condo sellers, the pricing and presentation are extremely important right now because buyers have a lot of options in that segment of the market. And so they're typically looking at the price. Now, I want to talk a little bit about the missing middle. And there's a big structural issue facing housing in the GTA. So right now, the housing ladder looks something like this. You've got tons of condos. And then the next step is often a $1 million detached home, right? Or that's a massive jump. And what the region really needs more of is what planners are calling the missing middle housing. Things like townhomes. Recently, the Toronto Real Estate Board wrote an article on this, and it was that townhomes provide the bridge between condos and detached homes. They give families more space while still remaining relatively affordable. And I think this is something that we don't really talk about. We went along with stacked townhomes, but they don't feel the same. You know, I grew up in a townhome myself, and it was a fantastic housing option. And so if the region wants a healthier housing market long term, I think we need to focus on a lot more townhome communities built across GTA, not condos. Condos are not the answer. Rent-controlled buildings are not the answer. Freehold properties are always going to command a premium, but it's not realistic for everyone. So I think we really need to get into more townhomes. It's a perfect in-between. But when we put all of these signals together, all of those things that I just went through the video, what does that tell us? Well, buyers are cautious, sellers are hesitant right now, and the market is still trying to find its balance. The Toronto housing market right now doesn't seem like it's crashing, but it's not booming. I think we're like in the waiting period, and the next few months will kind of tell where we're going to go with things. We're going to be relatively flat. You might have the average price go up a little bit, then it'll go down the next month, and might go up a little bit the next month after that. On a channel note, we actually passed 1,000 subscribers, which is pretty cool. And so I want to thank everyone who watches these videos. It has been a really fun ride so far, and it's been great grabbing coffees, meeting with you on phone calls, even video calls, and even had a great couple introduce themselves to me at a grocery store the other day. And I said to them, I might not be able to wear sweatpants in public anymore if that's ever going to happen again. Just wanted to say I appreciate all of you. We're going to keep putting out honest, easy to understand content about the GTA market. Thanks for watching the videos.